Brokers Digest, a webcast series by The Edge Singapore, discovering market opportunities with you. This episode is sponsored by Phillip Futures.
Hello and welcome back to another episode of The Edge Singapore's Brokers Digest with me, Amala Balakrishna. In today's episode, we'll be talking about cryptocurrencies, a hot topic at the moment since more people have been looking at it to grow their wealth. Estimates from CoinMarketCap puts the total crypto market cap at over $2.53 trillion, a high that was last seen in May 2020. Interestingly, the popularly traded Bitcoin accounted for about $1 trillion of the value, with its price surging by over 400% in the past year. Elon Musk has a huge influence in the price rallies of Bitcoin and cryptocurrencies. In the morning of October 18, the Tesla boss tweeted a text art image of the lovable Japanese dog Shiba Inu with a rocket ship, a slang in the crypto world meaning to the moon. Crypto prices jumped by a substantial margin shortly after, and Musk followed up with a tweet apologizing for the party rocket. The movement in the prices of cryptocurrencies has led many market watchers to say that the interest in the digital currency is not likely to go away. So joining me today to talk about the buzz around cryptocurrencies is Mooris Chew, an analyst with Phillip Futures. Hi Mooris, great to have you with us today.
Hey Amala, nice to see you again.
Yes. So Mooris, did you, like many others, buy crypto this morning after Elon Musk's tweet?
I think for more people in the market a bit longer, they've gotten a bit used to firstly crypto volatility as well as Elon Musk tweets. There have been some people who have actually tried to automate trading, buying cryptocurrencies right as Elon Musk tweets them. Seen mixed success. So myself personally, I'm not too excited whenever this happens, but certainly it makes for interesting talk over lunch whenever it happens.
Definitely. So do you think the interest in crypto is all a hype?
I think there's heavy elements of hype, especially when it comes to briefly people who buy it without knowing what they're buying. But there's actually a lot of, I'll go right into it. There's a lot of use cases behind cryptocurrencies, people using them for real world applications and not so much of buying to hold it just for holding's sake. So there's a lot of elements of hype, especially from say retail or institutions who's looking to just buy and hold. But on the side, there's been a lot of very exciting developments, especially if you want to keep track of it personally, especially for people listening in. You can see what the banks are doing with cryptocurrencies. I think that's a pretty big sign of whether it's a hype or not, because would they really be developing those kind of solutions without it actually having some real world value? Probably not. Yeah.
Yeah, that's true as well. So maybe before we proceed, I'd like to address a question from a viewer on the difference between crypto, Bitcoin, and the new kid on the block, which is NFTs. But to me, the commonality between the three is that they're all digital currencies of sorts, and in recent months, they're looked at as money generating tools. So what do you say, Mooris?
Cryptocurrencies, Bitcoin, and NFTs, right? So cryptocurrencies, the basic definition is cryptocurrency, right? So crypto being cryptography, which is a way of kind of encrypting something, right? So you can actually do your own cryptography as well. So basic ciphers or your basic hashes. So without going into those kind of details, right? There's about, say, CoinMarketCap estimates maybe 12,000 cryptocurrencies currently. The danger with that is if, let's say, you were to track all of them, right, you realize that a lot of them actually go missing halfway because a lot of them are not legitimate projects, but actually many of them are. So cryptocurrencies, there's many different kinds, and they're all of them start usually with a problem statement. This is my project, this is the token, this is what the token is supposed to solve or supposed to do. So those are cryptocurrencies, and the underlying technology is again cryptocurrency, right? They use cryptography and the blockchain method of which is like, say, distributed ledger method of actually securing your blocks, so to speak. But when it comes to Bitcoin, right, Bitcoin is firstly your apex cryptocurrency, the first one that starts, right? I think it's a lot easier to understand the basics of it than a lot of people realize. The starting white paper of Bitcoin, which is the creator, why he actually thought up of Bitcoin, how he lays out the principles of Bitcoin, The whole white paper is just maybe 10, 11 pages long, and it's actually written in very simple language. So the purpose of Bitcoin in a nutshell, if I were to summarize in a sentence, right, is actually to cut out the middleman when it comes to transactions. Let's say if I send money digitally to someone else through a bank service, right, there's a middleman, that's your bank. So that's the easiest example to understand. So what Bitcoin came up with is that it's a trustless system, right? So they are the first one to have this trustless system where you don't need a middleman. And your middleman, so to speak, is actually your Bitcoin miners. So we can go more into detail this session, next session, anything like that. But the difference between Bitcoin back then and now is that, or rather the no difference is, Bitcoin started in 2009, right? It's actually a lot slower than other payment technologies out there right now, which has actually created a kind of gap for other cryptocurrencies to enter. So one of the faster cryptocurrencies in terms of payments now, because a lot of people know that you can use Bitcoin for payments, right, is actually Litecoin, which was created right after Bitcoin. So it's a lot faster, it's a lot cheaper than Bitcoin. So you can see, it's a big difference. A lot of people prefer Bitcoin just because it was the first cryptocurrency, not necessarily because it's more useful. NFTs itself, there's a whole range of them nowadays. So NFTs, you can look at it as a unique identifier that is kind of like a proof of ownership or proof of identity, so to speak. And it's based on what they call like blockchain technology, which is like a form of distributed ledger, right? So what it makes it, in a nutshell, simple language, so to speak, right, is that it's incredibly hard to fake ownership of something. So NFTs give you ownership of something, a digital asset like a picture. So a lot of people would say, I mean, I have friends who come up and say that, it doesn't make sense. You can right click, copy, paste, or you can save as image, right? But the thing is, the difference is, like, for instance, I think a lot of us when we were young, we collected trading cards. So there's a lot of different kind of trading cards. Let's say Pokemon trading cards. You get the shiny trading cards, you get the holographic ones, right? Among those, there's also different kinds of trading cards. Or for instance, when it comes to merchandise, you can buy Yeezys, you can buy Nikes, you can buy all sorts of sneakers, but there's a difference between a pair of Yeezys worn by you versus one worn by a celebrity. But how do you prove that it was worn by a celebrity? So that's where NFTs come in. You can actually prove the history of something, the trail of ownership of something. So it's quite an interesting technology that hasn't been done before, because previously you had to have a third party do it. Now it's actually all just decentralized, which means you don't need a middleman for it, which is pretty interesting. So you can create your own NFTs as well. I heard the Edge did create their own NFT recently as well.
Yes, we do have an NFT of the picture of all the issues from issue 1 to 1000. So it's interesting times that we live in, actually. And just like what you said, I have been hearing stories about how people have made over like thousands of dollars on crypto just like months after putting an initial investment of as low as $300. So at the same time, there have also been cases where investors have lost millions in cryptocurrencies, like in the case of Tokyo earlier this year. So would you say that investing in crypto requires a bit of caution, Mooris?
Yes, definitely. I think in our position as sort of a broker, we have conversations with market participants, clients. I think the number one thing that a lot of people are seeing is they don't know what they're investing in. They don't know who they're investing in. That's the next thing. Who they are investing with, rather. And the third thing is it's a bit of, I'll say, investor bias. To put it in a less polite way, perhaps greed. So, when people are coming up to you and they're guaranteeing you easy money, it's never a good deal. Everybody knows this, but sometimes the temptation is too hard to get over. And it's a bit of a different era now from, say, maybe 2017. Because 2017, I think your accessibility to cryptocurrency was a lot less. Social media arguably was a bit less pervasive than it is now. So right now, it's like what maybe other asset class analysts will also deem the FOMO economy, where you see all your friends making so much money from cryptocurrencies, you want a piece of that as well. So whenever someone comes up to you with such an offer, right? You can reject it now, but then in 1 month's time, when someone puts up a headline that Bitcoin breaks all-time high, then it's like, I should have done it. So it's become a very difficult kind of game to play, so to speak. It's really more of a psychological game, which goes back to, when Elon Musk tweets this morning, he says that, hey, Shiba Inu something, should you buy into it? No, you're going to buy at a peak. So hopefully for investors, at the very worst case scenario, is once bitten, twice shy. If it happened to you once, make sure you be a bit more disciplined in your next approach. But definitely, I think the takeaway for everyone should be there's no easy money to be made still, because many people are in fact losing lots of money in different kinds of scams, or just being a bit overextended in their portfolio. So it's quite dangerous. I do agree.
Yes, so I think, we saw cryptocurrency bull markets appearing in 2013, 2017, and now in 2021. So each time naysayers have said that the bubble will burst soon, but instead we have seen that crypto has gone from strength to strength, right? So
Yeah.
Mooris, I have $1 billion question for you. So where do you think the crypto market is heading?
It's perhaps even $1 trillion question. I would have some tips for analysis, I think, which would be helpful to people who wouldn't be too familiar besides reading, just articles, right? So I think the first tip I can probably share is that cryptocurrencies, if you're looking at a chart of cryptocurrencies, especially when it comes to Bitcoin, it helps to look at, firstly, only Bitcoin. If you're too busy to look at other things, look at only Bitcoin. How Bitcoin does affects every other cryptocurrency, with no exceptions, to be honest, more or less. And when you look at Bitcoin, I think what's helpful is you look at it over a longer time frame. So it's an interesting thing you said, it's like many people have declared like Bitcoin dead, so to speak, if I were to paraphrase. Bitcoin dead over the years. But this slide that we can see here is that, over just the past year, you've heard a lot of people declare that Bitcoin is worthless, Bitcoin's going to zero, things like that. But at every single dip, if you look at it on a more sober, weekly, zoomed out time frame, every single dip has been higher than the last bull market top. So in a way, I'm not saying that it's going to go higher. It's never going to go down. But there has to be a bit of sobriety when looking at it. And that kind of sobriety can only come when people take a step back from, let's say, when in May, it dropped all the way down by half in June, which means your investment halves, right? So when you have that kind of panic, and then suddenly you realize that actually Bitcoin hasn't even touched its previous breakout point, which was 20,000. So again, from 60,000 it drops to 30,000. Does it mean that the world is going to end for cryptocurrency? Not so, but you only realize that once you zoom out, admittedly past your near-term losses, you have to get over that. But you start looking at it from longer time frames and say, hey, actually it's not that bad. So I think taking this kind of analysis mindset helps a lot, for starters, at least. So the other thing I can share with is, right, look at the future of Bitcoin, so to speak. So the cryptocurrency environment right now is growing in terms of a lot of different projects. Admittedly, many are not legitimate, or many are, let me put it this way, I don't think they're going to last beyond this year or next year, right? But there are many legitimate projects out there, such as for Decentralized Finance. It's a it's really a thriving ecosystem. And they actually use Bitcoin as a base currency for trading. They don't use, there's no such thing, technically there's no such thing as a, Bitcoin USD cross or Bitcoin SGD cross, things like that, right? So because, where do you trade cryptocurrencies? You trade it on crypto exchanges or peer-to-peer, right? Or decentralized exchanges. So actually a lot of people use Bitcoin to trade. And as long as there's that use case for it, right? Actually, I think it's useful to stop looking at Bitcoin USD, or as some of my friends are actually looking at Bitcoin's Singapore dollar. That actually makes it more difficult for you to analyze, because no one in the world does analysis in Bitcoin Sing dollar. So every time you read a piece of research, right, you have to convert 1.34. That's just like, it's a bit difficult. So if you look at Bitcoin as a base currency for a lot of cryptocurrencies out there, you can actually start to discern a lot of different trends. I'm not going to say where this chart is going to go, but people are looking at this chart and they're seeing, like, there's some interesting trends. So this chart specifically is between Ethereum and Bitcoin. So they are seeing periods where Bitcoin's gaining versus Ethereum gaining, and they're noticing that, Ethereum over the years is gaining over Bitcoin. Yeah, so it's and Standard Chartered recently released a report themselves, where they have some very explosive predictions for Ethereum in the coming years rather. So I think if you are an investor out there, you're looking to up your investment game and you haven't looked at this yet, these kind of analyses are a good starting point, so to speak.
Yes, that's very useful, Mooris. So before we talk further about this, you mentioned briefly about some of the use cases of Bitcoin and crypto. So maybe could you share a bit more about that with us, please?
Right. So maybe one of the more exciting ones other than NFTs nowadays, because NFTs, I think it's not really such a difficult topic to accept. Definitely a difficult topic to unpack, but it's not a difficult topic to accept. It's just, people like art, people like unique things, so why not? And there's a real use case for unique identifiers. Say, for example, like vaccine passports. You definitely need to be able to verify that those are true, right? But when it comes to other use cases, I think another one is decentralized finance. So decentralized finance, I think, has had a lot of excitement over the years. It comes mainly from the few functions of decentralized finance that are growing, which is your lending, staking, liquidity provision. So I wouldn't have time to go into each of those, definitely, but it's a pretty thriving ecosystem. People are very excited for what they can do with their cryptocurrencies, and this is actually pretty new. And I would say that it's worth your time to look into, because I think in the next few months, you're going to see some pretty big transitions. Firstly, starting with Ethereum. So Ethereum itself, there's, as of end of this month, is starting on a roadmap for mainnet upgrades for Ethereum 2.0. So the problem with Ethereum now is that it can't scale very well. So Ethereum is a network where you run a lot of what we call smart contracts, decentralized applications, right? Right now, the volume is low enough such that the moment more people use it, it becomes more expensive to use the network. But between end of this month to, say, Q1 2022, which is just a span of a few months, they're looking to upgrade the network. And with that, right, it depends on who you ask, but people are actually looking at a huge scaling up in terms of transaction volumes or transaction capacity on the network, which actually lets people use, again, back to what DeFi people are doing in DeFi, which is your staking, lending, and your liquidity provision. You can suddenly do a lot more of these cheaper. So, I'm not saying that it's definitely buy Ethereum now. I'm not saying that, but it's suddenly you're opening a whole new game, so to speak, where what used to be too expensive suddenly isn't that expensive anymore. So I think people should monitor those kind of developments in the decentralized finance space, and especially during this period when Ethereum which is the biggest network when it comes to decentralized finance, is undergoing this upgrade.
Mooris, what you just said reminds me of some of the things that I've been hearing, and some of the questions from the viewers as well, that about the talk that decentralized finance tools will soon take over traditional financial services simply because they are more secure and efficient. So what would this mean for investors in the longer term?
I think it's a bit hard to say, because the first thing they need to monitor is what regulators are saying about these kind of developments, right? I think there's a growing sense of inevitability that no matter what regulators do, it's actually going to happen. I point to one example, which is Bitcoin mining power. So roughly 60% of the global Bitcoin mining power came from China as of beginning of this year, right? And it was still growing. But when China started cracking down on Bitcoin somewhere April, May, roughly, right now, Bitcoin mining power out of China is zero, virtually zero. So they've even gone into people's homes or offices, not forcibly in the sense, but they've actually checked for people mining Bitcoin off their personal computers. So that's how strict they are going. So now it's at zero. But did you see the Bitcoin network crash? That 60% mining power suddenly go to zero? It didn't. That's also not really how mining works. But the point being that it's decentralized enough such that can regulators really do anything about it? Yeah, sure. They can, and perhaps they should manage the more consumer-facing aspects of it, like for example, when it comes to investor education, or how susceptible you are to scams. But can they control the network, so to speak? People maintaining the network, the developments in the decentralized finance space. I think that one's a bit more difficult. The regulation's probably quite some time away. SEC chair himself has said that crypto regulation, if credit cards were anything to go by, crypto regulation will probably be many, many years away. So with that in mind, I think the developments are going to continue. But people definitely do need to see what regulators are doing to get a bit more of a clue as to where those industries are going.
Okay, so Mooris, I think before we close off today's discussion, what would you consider to be a good market strategy that our viewers can adopt when looking at crypto?
Right. I think the other than what we've talked about previously, I think one thing they need to look at definitely is this unique thing about cryptocurrencies, which is what they call the on-chain metrics, right? So cryptocurrencies itself, real quick, you can actually look into the individual transactions. So you don't usually do it yourself because, like say Bitcoin, right? There's a transaction roundup every 10 minutes. So you're not going to go look at every single transaction. There's thousands of them, right? So you can actually look at block explorers. So it goes into the actual block, right? And then you can see how much people are transacting with each other, at what entry point, at what exit price, things like that. How much are they buying? How much are they holding entirely, right? So it becomes very interesting because you can see things like, hey, this person already has 100 Bitcoin, but he's buying more, but the market is going down. So therefore, he definitely has the expectation that the market is going to go up. So can you really do this with other asset classes? Not really. Should you do this yourself? Probably not. There's a lot of people out there who actually round it up for you. You just take a quick look at on-chain transaction kind of analysis. There's many different kinds. They've been very creative about how they analyze Bitcoin and cryptocurrencies. And I think this is something that immediately can up someone's game, because you can really see, for example, the entire market, how many people are in profit, how many people are out of profit. A simple way of analyzing that is, if you look at everyone is in profit, your incentive to take profits to sell is very high. If most people are out of profit, why would you sell at a loss? So, those kind of signals, right, are pretty powerful, or at least they provide a guide. I'm not saying that it's guaranteed to, give you profit, but definitely it's something that people should be looking into if they're not already, especially since, cryptocurrencies are unique in this way.
That's so true. And you were just now you mentioned briefly about on-chain, right? Maybe you could share a bit more about that first.
Right. So when it comes to on-chain, I would suggest maybe if I were to share this website, which is a open access website. So again, this is really more for education. Please don't look at this and, not you specifically, but please don't look at this and say that, oh my God, it's gonna go, everywhere. It's gonna go super, super high.
Scary, of course.
Yeah. So when you look at these kind of on-chain metrics, what it's supposed to do is just really guide you with your market strategy, entry, exit points, what's the rest of the market doing, things like that. So, I mean, if I were to focus your attention on those four that I'm showing here, for instance, the stock to flow model on the top right. So if people look that up, again, is from an open access website, look into Bitcoin. Stock to flow model, if you read up about it, it has actually been decently good guide to predicting Bitcoin bull market equilibrium prices. So the last one was actually around 20,000, which was pretty accurate. The current one is not reached yet. But the thing is, people are still analyzing these kind of models to see whether it's really true. So it's an ongoing process, but so far it's been pretty encouraging, I'll say. Other things they can look at is, for instance, some of them have to do with what are say the pool multiple, right? There's one on the top left. That one is actually looking more at people who mine cryptocurrencies. So people who mine cryptocurrencies, they get crypto at a rate of, whoever wins gets crypto at a rate of 6 Bitcoin, 6.25 Bitcoin every 10 minutes, which is a pretty life-changing amount of money for some people. But to miners, it's just another day at work, right? So 6.25 Bitcoin, what are they doing with that? If every 10 minutes there's 6.25 Bitcoin being sold versus 6.25 Bitcoin every time new supply is being held, then there's an implication on market dynamics there. So these are what these kind of metrics are tracking, and instantly they can really upgrade your cryptocurrency investment analysis straight away without having people like me to tell you what to do with your investment portfolio or anyone else. So these kind of things also help you level up, in the sense that there's a lot more analysis out there in cryptocurrency that use these kind of on-chain indicators. So once you learn about all these, you can start understanding those kind of reports and really become more sophisticated when it comes to cryptocurrencies, rather than, it's like hey, it went up by 10% today. I think maybe today it's going to like pull back by 5%, then how do you know that? It's because it went up by too fast. So it's not a good way to trade, I would say, especially given how volatile it is. And these kind of things can eliminate a bit more uncertainty than usual for average investor.
Right, Mooris. So I'm guessing that the prices of crypto haven't actually reached the top just yet.
I can't say, but definitely look into these resources, your resources yourself. Perhaps what I'll say with heavy caveats is that the stock to flow model itself, famously has predicted that the next market cycle top, which is 2026, will be in excess of 800,000 US dollars. So again, I'm not saying that it is going to that level, but the model itself is predicting these things. So it's been by some measures, it's been quite accurate so far. So definitely a lot of people are analyzing it quite closely. I myself would be very curious to see if something like this works. So it's interesting times. I'll definitely be watching these charts for the next 4, 5, 10 years, however long that cryptocurrencies exist.
Yeah, it doesn't seem like it's going to go away anytime soon, right? For crypto.
Yes.
So thank you, Mooris. With that, we have come to the end of this week's Brokers Digest. To our viewers, we hope these strategies help you in your investment decisions in the short and medium term. For more analysis in the stock market, you can visit the websites of Phillip Futures or The Edge Singapore. Do also check out our recent cover story entitled Two Faces of Crypto for more insights on the digital currency. Do like us on Facebook and Instagram to be alerted on our upcoming episodes and webinars. Once again, I'm Amala Balakrishna, and with me is Mooris Chiu, and we hope you have a better understanding of cryptocurrencies. Take care and goodbye.